Todd, how are you doing today?
Hey, how are you guys?
Happy New Year.
Hey, Todd.
Happy New Year. I saw you last week. We had this conversation. You're short-term memory.
Well, that's because I'm doing too much CB1 and CB2. Apparently, you know that they found they're surmising, they're pontificating in the research clinical sector that short-term memory loss was actually part of the survival strategy of people who consumed cannabis. It was sort of like a byproduct of the symbiotic relationship between plants and humans. Short-term memory loss, because if you lose your short-term memory, you're relaxed and you have no anxiety and you sleep well. Because you can't remember what you were worried about by the time you go to bed.
I think that's true.
Well, I believe it's
I'm tired.
true.
I want to go to sleep.
I'm tired and I want to go to bed. Anyways, Todd, so since we chatted way back there last week, the market has gone into a decisively positive and bullish phase. Do you see this lasting? And is this something, if you were to point to the macro catalysts that would be responsible for this sudden effusiveness in the first quarter of 2019, what would it be?
I think certainly, if you were talking about the macro tape, I think Powell walking back some of his quantitative tightening language with the balance sheet certainly helped sentiment. It got pretty panicky the last week of the year, but now we're back up. We talked about there's a lot of resistance levels here across the U.S. indices and sub-indices and across the world. Doesn't mean we can't go higher. I just think there was a fair amount of technical damage that was done in the fourth quarter that we need to work through. But yeah, and in the cannabis space, I think a lot of the tax loss selling we talked about last week is starting to unwind, and we're seeing that being priced in as investors get some risk back on in the sector. So it was nice to see the U.S. cannabis index or names kind of hand that baton over to the Canadian producers earlier this week. So we'll see as we kind of get to some resistance levels in these sectors as well, how they act.
Yeah, you bet. So then is the thesis at the end of 2018 still the same for 2019? In other words, the U.S. operating Canadian listed companies are still a discount relative to their Canadian peers?
Well, they are, but it's nice to see some bifurcation and nice to see some rotation. A lot of these names, as we talked about, from the last week in December up until I guess earlier this week, they're up, some of these names 50, 60, 70%. So as they've sort of, now started to catch their breath, to see Canopy get on a horse and to see, Afria start to try to fill that gap in front of earnings tomorrow. Some constructive action for sure, but hopefully we see some backing and filling and get a better sense of the tenor of these things, because one-way tapes are always tough to trade.
You bet. You bet. So on the macro side, do you think that the picture globally, the outlook globally, is sort of trending towards a recession or the opposite?
I'm not an economist. I'll tell you that we've had a hell of a bull run for the last decade, and and certainly at a point, we're going to give some of that back. I actually think it's, be a pretty bullish thing if we could sort of back test, S&P 2250 or thereabouts, and then work on the next leg higher. This is going to be transitory ultimately, I think, but it could be painful first. I don't think you can forget the lessons of the fourth quarter, because you had a good 2-week rally here. Like the stocks that you own, have some powder, loose grips on the handlebars, and there's going to be some good opportunities. I continue to think this year is going to be a big year for cannabis. I think we're going to see some banking reform. That's going to lubricate the system, and we're going to see some real rotation of institutional capital into the space.
Mm-hmm. So you think the big money is coming in 2019, like sort of the more conservative capital pools are going to start to be more visible in the sector?
Well, I don't know about the more conservative capital pools, but I certainly think if Wall Street's demonstrated anything over the course of history, it's the ability to repackage and resell risk. And there's a certain appetite in the marketplace. I think just this week you saw Piper Jaffray come out and initiate Canopy and Tillery. We've gotten some calls here about Wall Street firms that are looking to move into the space. So, we know for a fact that Wall Street is circling we think that adoption is going to lead to this institutional participation. And again, we talked about this, not to sound too pie in the sky, but if you've got a $300 billion market for cannabis and you contemplate that as an ingredient as opposed to the end product, you could be talking about a couple $1 trillion in market cap in 10 years versus about 50 billion right now. So the scale is pretty massive. I don't think people understand exactly what this is or how this is going to play out, but we're pretty excited about it.
Sure. So is CB1 Capital then best characterized as a longer-term buy and hold investor, or do you trade opportunistically out of markets when you see valuation breakdowns?
That's a great question. So, we're looking for companies that we can hold on for the long term. Obviously, we will rotate. We talked about it, I guess, last year, how we were pretty light. I think we said 9% in Canada at a point. And then last week, how we were starting to rotate back in. So we think there's going to be certain capital flows. But the opportunities that we see right now are most pervasive in the U.S. side on these multi-state operators, and also on the biotech side, particularly after some of the price movement we saw in the fourth quarter, where biotech stocks lost about a third of their value on the aggregate. Cannabis biotech wasn't immune. I think it presented some good opportunities, and we continue to think that's going to be the next phase as efficacy-driven solutions start to manifest through clinical trials.
Okay.
Todd, Tillery, it's a volatile stock. What's your thinking right now on Tillery?
Yeah, we don't have a position. We thought about trading it earlier this week just because we like Canada, but we're going to focus on the names that we feel a little bit better about from a fundamental standpoint. We talked about Organigram, we talked about CanTrust setting up. Village Farms is a name that we like.
Yeah.
And then there are trades also. Canopy, we've been trading from the long side of Freya, that we treat more like trades. But in terms of investment, I think we talked about Elixinol not too long ago. Here's a stock that's based out of Australia that's now, rough justice trading at $3 versus trading at about $1.40, in October. So the opportunities are there. Wall Street's going to do the work, and a lot of these inefficiencies that exist in the cannabis market are going to be unearthed, and we think the more efficient markets are on their way into the marketplace, if that's not too redundant.
Mm-hmm. Yeah. So would you say that I'm looking at the next phase of the cannabis bull market that gets us towards a couple of $1 trillion, and I'm looking at the biotech sector in particular as potentially the real value multiplier of the space, as opposed to, say, consumer beverages, consumer products on the rec side. Would you, from where you sit, Todd, do you think that it's the biotech side that is going to be the main value driver as they start to understand more the molecular applications for the various CBD components in the human genome?
Well, that's certainly the side that's the most offsides. We were just talking about this in-house here. Most secondary schools, medical schools, haven't really studied the endocannabinoid system. It's first discovered in 1990. So the parallels between the cannabis plant and the cannabinoids in the cannabis plant versus the endocannabinoids that our body produces, there's not many people that are aware of that. So that offsides is pretty massive, but don't sleep on the consumer side. Whether it's going to be beverages or nutraceuticals or consumer packaged goods, cosmetics and vanity, the Farm Bill is going to open this up. We're going to start seeing this all over the place. And I think the wellness applications on the consumer side are going to be huge. I think it's bifurcated a bit. And the way we position our book is that we have a bucket really for that consumer side, and we have that bucket for the more traditional biotech side. But I can tell you from looking at the price action, a lot of people, they don't even know that this is a space yet. So yeah, I think that's the most underappreciated upside. Sure.
So what percentage of your capital is committed to the rec consumer packaged goods side versus the biotech side?
Got about, I would say about 30% of our book in biotech right now. We're pretty heavy on the U.S. side, but like I said earlier, I guess last week, that we started to get a little bit more aggressive with Canada after that downdraft, and especially with all this tax loss selling starting to unwind. But you want to leave powder here. This is a very volatile sector. It's something that I don't think we talked about last week, which I thought was pretty interesting. By my pen, the global cannabis market had 9 separate 20% declines last year. 9 separate bear markets for the global cannabis index that we follow, which is a pretty amazing thing. I've never experienced anything like that before. So coming into 2019, it's like what doesn't kill you, you figure it's going to make you stronger.
That's a good attitude. Yeah. All right, Todd, let's leave it there. Again, thanks so much for your participation. Once again, great insight. We'll come back to you soon.
See you, Todd.
Yep, thanks, guys.